Hey, Lauren Hughes here again with Integrity Home Group and Keller Williams Preferred. We are still talking about investment properties, and we're going to go over some numbers, so I apologize if I bore you off the get-go, and I will start to do these on the whiteboard, but right now I've kind of have a bit of a beautiful mind thing going on with all my crazy multiple whiteboards, so we will get to the cool, awesome whiteboards. Maybe I'll go to see you and hang out in the engineering department like I used to and get on some of those fancy whiteboards when COVID cools down a little bit. But for right now, I wanted to just talk a little bit more in depth about some investments that I'm looking at, just to kind of give you a baseline to, see if that's something you like or if you want to do something completely different. And it's just more talking investments. There's no right, wrong, or otherwise. It's portfolios are so specific to and catered toward everyone's needs. So I'd highly doubt everyone's portfolio is going to look the same. So if you have any questions, I've been doing this for over 11 years and I've come from 3 generations on multiple sides of my family trees. And so it's kind of a tried and true method in my family on, I wouldn't say anyone's gotten rich, maybe one, and the others have just done well and they live comfortable lives and they don't have to worry about, the day-to-day expenses because they have that covered. And that's basically why I got into it so early, or in my late 20s, about 11 years ago. So I wanted to talk about some numbers that I'm looking at right now. So in a lot of videos, I do talk about Boulder County. I can get a little critical about Boulder, actually very critical about Boulder. And that's just because I've been in and out of Boulder since 2001 and bought our first property in Boulder in 2003. And we've kind of bought and sold in the area for so long. And it's just, I have a lot of opinions because I've been there so much and I've run into so many brick walls or been slammed down so many times by the different rules and regulations that it's kind of a love-hate. And I still like it. I haven't left yet. Actually, I'm no longer living in Boulder, but that's because there was opportunities elsewhere. And so I want to take the rest of the time we have today to talk about some of those opportunities, or kind of where I'm finding my happy place in my portfolio. And that is in Colorado, because Colorado's expensive. So my numbers look much different in the Caribbean and in Georgia, where I have other investments. But right now, my main focus is making it work in Colorado. And I'm just having to get over the cost per square foot compared to the rents that you get. So right now, I'm in about the $700,000 range. And the reason why I've landed on that number is because that seems to be a bit of a precipice in how you on kind of rents or maxing out your rents in the Boulder and Denver. So it's usually those two are my big anchors where the bigger rents are. And I try to, get as much rent as I can for the least amount of money. And what I'm seeing is kind of where I'm trying to go to, a happy place is about rents between 3,000 and 5,000 are pretty standard for those two areas. If you're outside of those numbers, you're going to go 3 and probably lower, 2 to 3. So I am trying to stay in the expensive areas or the soon to be expensive areas. I'm looking or just invested in downtown Superior when the property is about $700,000. And I do believe the rent will be around $4,000 when the project is done. I think the rent will be closer to $4,500 to $5,000. The current rents right now are, I think the lowest I've seen, because there are several investors in that area too, and I think the rents they're charging are between $32,000 and $4,000. And then you've got the big single family homes that are selling for over $1 million. Those are renting for $5,000, but that doesn't really work. They're the big ones, even though they're $5,000, you're not getting the return on the investment that I'm seeing with the little bit cheaper homes. And I think the best place I have seen is around that $700,000 mark, maybe, alter plus or minus about $50,000 depending on where you are. It's not just Superior. I like downtown Denver. Denver's getting some really cool micro pockets, and I'm really excited about those near the stadiums or near some breweries. They're getting pretty cool All right, so micro pockets in Denver. There's some cool areas down there too. And so right now I'm actually not doing, for the first time, I'm going away from single family homes, and well, for the first time I'm investing in townhomes. And I've kind of shied away from townhomes, and I don't really have a reason why, but I started off investing in Georgia, and you can get so much land and so much house for relative to what you can here. And what I'm finding out is I don't want to pay the houses are so expensive in Colorado compared to the rents. It doesn't seem to make much sense. So I've kind of altered my, ideal place in Colorado. But anyway, it's so I try to be as specific as I can to give you guys knowledge so you can then, turn it around to work on your own portfolios. But it's just, investment portfolios are so specific to each person, which is why they're so powerful and they work for so many people, is because it isn't one size fits all. And so I'm just talking about my personal portfolio that I do plan to have grow to $10 million within the next 10 years. Even though those sound like nice numbers, they are not arbitrary. They've been in the works for the last 11 years. It's just kind of my final countdown. And so it just it's clean, and I like clean numbers. So I do, especially for these videos, you don't want to see me try to do math on camera. It wouldn't go well, especially because I don't have access right now to a calculator. And anyway, I will have trouble when my daughter starts doing higher math than what I can do in my head. Anyway, so I try to be as specific as I can with the numbers, and so that's why I'm throwing out, I'm in the $700,000 range for my investments, but that's because that meets my goals, it meets my criteria, it meets my return on investment, and the return on investment that I'm going for with these properties is 10 to 15% of the money that I put into it. So for the sake of math, let's say it was a $500,000 house, I have to put in about $100,000 to $150,000 for each property. But for math's sake, we're just going to go with $100,000 for a $500,000 property. I expect to make at least $10,000 on that unit after expenses every single year, maybe a little more. And there's a couple numbers that I don't put into my equation, even though I might, but this is where it's just so specific to what you're doing. In Georgia, I don't do it. In the Caribbean, I will throw you out of the room. We do not guess in the Caribbean, because anything and everything can happen at any given time, and trends mean nothing down there, or where I am anyway. But Colorado has been fairly consistent, I would say, the last 20 years, even taking into account the debacle that was 2008 and 2009. However, I might start adding in inflation, and I do not do that in Georgia, won't do it in the Caribbean, but I might consider it in Colorado because it is so consistent and it is repeatable, and I might, but like I've said before, I like to be ultra conservative with my numbers, and it's a variable that I haven't been able to pinpoint and haven't been able to quantify reliably year after year after year, and so I don't add it. I might add 2 to 3%, maybe 4% on a good day in Colorado, but I usually don't add that into my investment portfolios. And so I know we're getting a little nitty gritty with numbers here, but I just wanted to tell you, I try my portfolios based on a return on investment of about 10 to 15%, and that's real hard numbers. It's not assumptions. Those are just and it's not about how much my house cost or how much it's worth. It's about the physical money that I am giving or I am spending. So it's not counting my mortgage. It's my physical cash money that I'm putting in on that property, and then the money, my cash flow that I get back year after year. And so I keep it nice and simple. And so, and I talked a lot of numbers, and I didn't have any good graphics yet. But if you have any questions, or you're just like, Lauren, what on earth are you talking about? I would love to talk to you. I am not a financial advisor, but I am an accredited investor that's been doing this for a long time and has generations doing it too. So give me a call. Thanks.